Welcome, ladies and gentlemen, to Rich Dad's Stockcast with Andy Tanner, Rich Dad Wealth Expert. We haven't been doing a podcast or a YouTube video for quite some time, but we felt it was time to come back. We actually had quite a lot of requests, which was pretty flattering. None of them said bring Greg back. All of them said Andy Tanner, but we're going to let that go. I'm going to make you three promises. We're going to talk about why stock investing might be the best investment tool out there. We're also going to talk about why it might be the worst investment tool out there. And we're going to answer the question, how is it that the stock market really seems unaffected by the news, the negative news in the economy? And if you're listening to Robert's Rich Dad Radio, you probably hear a lot of it, things like the dollar dime, but we'll get into that in a minute. I did want to tell you about a conversation I had with Robert just the other day, and it was talking about the cash flow quadrant. If you're familiar with that, there's the E quadrant, that's employees, the S quadrant, self-employed, then there's B quadrant, big business, and the I Quadrant, investing. And really, Robert's goal is to get everybody into the I Quadrant. Oh, wow. Check that out. We have an amazing producer who's already thrown it on screen. If you're listening on the podcast, you're screwed. Sorry, but it looks great. I promise. Maybe go look at YouTube. Anywho, so there's this cash flow quadrant, and most people have a path. They go from employee to small business, and then they grow their small business into the big business, and then they have all this money that they got to get rid of, so they invest it. The unique thing about the stocks, if you learn how to invest in stocks, you can go straight from employee to investor, which is very unique. Almost no other class can you or should you do that. I'm not saying you should do that here either. We'll have Andy explain a little bit of the pros and cons, but let's go ahead and bring Andy Tanner on here. He is Rich Dad Stock Expert. He actually just contributed to the Rich Dad Wealth Experts newsletter, which was, Andy, by the way, incredibly educational, especially where you taught me how to save myself if I picked a bad pick, how I can use your strategies to get out of it and actually turn a bad pick into money. So anyway, introducing Andy Tanner. Thank you, Andy.
Well, Greg, it's good to be back. We had so much fun doing the Stockcast, and we took a little break, and so we're just grateful to be back. I'm excited. This is such a great topic and such a great time to be speaking about stocks right now.
Well, let's talk about the time, because like I said earlier, if you're listening to Robert Kiyosaki, he's talking about the death of the dollar, the whole system coming down. We're talking about debt ceilings and the crisis and everything I hear. Inflation's mad. Everything I hear is we're going down in flames. And then I look at my stock picks and I'm like, are we? And so can you explain how there's a split there, how the stock market appears to be unaffected by all this negative news?
Yeah, we could talk a little bit about that. I mean, there is a lot of negative news on the big picture front. For example, in my home country, the United States, they always have a fight over the debt ceiling. And the thing I tweeted was, it's your own financial statement that's more important than the U.S. government's. But nonetheless, there's a lot of fiscal problems. There's a lot of problems with printing money. The U.S. Federal Reserve, they're doing their best to get a handle on inflation. But the stock market has been robust. There's a real interesting gauge. And the core gauge, they call it the fear gauge. It's called the VIX. And there's all types of different meters and different ways you can look at this. But it's lower than it was pre-COVID. I mean, as far as the sentiment goes, people have a lot of confidence in the market. Let me explain a little bit why that.
You're saying people are less afraid now? People are less afraid to invest now?
Yeah.
Than even
here's an interesting gauge where you have greed on one end and fear on the other. And our producer was, kind enough to go find something that makes it a little more simple, like a gauge. But what this really is based off of is an index called the Volatility Index. And, just to give people a little background of we're not just guessing. This is an actual metric. And here's how it works. If you are going to buy insurance, and let's say that you're someone like me, you're a cancer patient, cancer survivor, they don't even want to offer me insurance because the risk is so high. So you can tell how risky something is based on how much it costs to insure it, if that makes sense. Well, in the stock market, we use options. And so there's options on the S&P 500. You can buy an option to protect yourself in a crash. And right now, no one's buying those. The price for insurance is so low right now that it just shows that people, investors anyway, people in the stock market, they don't have a lot of fear right now. It's
So
really
right
much
now
more greed than fear.
you're saying options are basically the same as insurance for stocks, correct?
That's exactly what I'm saying. It's extremely similar idea because you're purchasing protection, right? You're
Okay.
purchasing protection. Well,
For anyone
it's
that's
like car. What's
Sorry, Andy,
that?
but for anyone who's listening and didn't get to see the graph, it kind of looks like a speedometer going from 0 to 100. 0 being people are
Fear.
terrified.
Yeah.
100 being people are greedy. They feel like things are looking pretty good. This thing is all the way over to 80 miles per hour. Like we are speeding. We are like fast track, like almost the danger zone. People are so greedy. Is that fair?
Yeah. And I will tell you this, there's certainly long term, long term, there's certainly things that there's storm clouds everywhere. So when Robert says, "Hey, the dollar is really in jeopardy," right? He's absolutely correct. When he says, "Hey, the fiscal irresponsibility of not just the United States, but in Europe and in Asia, all around the world, all of these things build towards a very difficult time." What happened though is in the United States, they kick the can down the road, or what I like to say, they roll the snowball up the hill, right? They push things out further, make it bigger, make it badder, make it worse. But temporarily, you feel. I hate to use the analogy of a junkie, but if a person on drugs decides to go into rehab, that's terrifying for them. But if they can get just one more hit before they go to rehab, they're going to be really happy. And so as long as they can postpone and push off, the inevitable. I mean, every single report you read will use the word unsustainable. But in the short term, it feels really good. So when Robert tweets out and he says, "Hey, the federal government in the United States raised the debt ceiling. That's going to make stocks surge." Yeah, it makes people feel pretty good. But there's other things than that we can maybe talk about, later in the show. But I think the foundation to understand, first of all, is very, very simple. That there's not a lot of fear right now. That's the reason the market's going up. There seems to be more opportunity, and I'll give you some reasons why I think, in addition to just lots of money being out there, people are very bullish in stocks, at least in the short term.
Andy, when I started this, I said we're going to talk about one of the reasons stocks are really dangerous for investors, and I think this is a perfect example, because while we're telling you the dollar's about to crash, the economy's about to crash, they're seeing the news, and they being somewhat uneducated maybe on how the overall economy works. They're seeing the news and they're like, "Oh my gosh, I got to get in quick. I got to get, in AI stocks before it's the next Tesla." And the problem, I think the real danger here is they can do it immediately. They can go straight from, "I don't know Jack, try to censor this. I don't know anything," straight to investor and to throw all my money in the stock market and hope for the best. And I think that's one of the biggest fears. Is that something that you're seeing out there as you train people and you coach them?
Yeah, I mean, I guess this is something I as an education advocate, I tend to shift and reframe that question a lot when people say, "Well, or really, is stocks a scary place to be because it makes it about stocks?" Or, is the real estate, is it a bubble? Is it time to wait and get discounts later? Is it time to get in before it goes to the next level? And people often talked about assets. If there's something that people that follow what I do have learned, is I don't talk about assets nearly as much as I talk about people. So if you wanted to say that the stock market, how can both be true? How can stocks be the best opportunity but also be the worst opportunity? Well, the X factor is the person. It's the person doing the investing. If I were to take the strategies I use and give them to my mother, give her advice, say, go do this. This is what I'm doing, Mom. I couldn't sleep at night. I'd be terrified because, she doesn't know what she's doing. It'd be the same as putting her behind the cockpit of a 747, right? But if you're trained and you're a pilot, you can put a pilot behind the cockpit of a 747 and it's the safest place to fly. So a good metaphor is the 747 is one of the best ways to travel, and it's also one of the most dangerous ways to travel. The X factor is, who's driving. So I really believe, as an education advocate, my context is always to be investor centered as opposed to investment centered. So I don't know if that's a cop out on your question, but it's honestly how I feel about it.
No, that's good. One of the things Robert's always talking about is that's the real danger of a 401k, right? Is that you're getting into all this stuff and you never get educated.
I often say that there's no investment that I know of in my home country that has more participation with less education than that 401k program. It's terrifying to me, which is, to your point, the reason that could be terrifying is if you have a major event, we call these black swan events, a major event because of some of the fiscal and monetary policy clouds that we can see, the storms that are out there. If they hit our shores, people, they're going to get wiped out. I mean, their retirement already. Let me kind of tell you how scary this is, just being off the highs. Vanguard comes out with a report every year. They just came out with their 2023 report, which has the 2022 data. And this is something I follow. As soon as it comes out, I look it up. There's $11 trillion in the United States in 401k plans and stocks, basically, and bonds, mostly equities, less debt. And of that 11 trillion, Vanguard's got about 2 trillion of it, almost 2 trillion of it. If you take a person 55 to 65, so they're staring retirement in the face in the next decade, the median balance is around $70,000. Now think about that. That's 70,000. So that's about $250 a month in retirement if you take a 4% rule on that. Well, the problem that person has is, what if the market gets cut in half? They're at 30 grand. They're at 35,000, and it completely wipes a person out. You can't even live a year on. You can't even live a month on 35,000 if you live in California. So it's rough. And so the idea of just going into the stock market right now, willy-nilly, saying, oh yeah, the fear gauge low, that doesn't mean that bad things can't happen or would happen. It just means that if you take the market's opinion, the opinion of the market based on how much insurance they're buying, they're very confident. They're giving themselves a lot of exposure, believing the market will go up, and they're too cheap to spend the money on insurance right now. They're so fearless. It's like, we'll just get exposed in stocks and we'll save a little money. I mean, imagine buying a home, even if you thought the real estate market was going up. Imagine buying a home and not having any insurance at all, any fire plan at all, just because you think, hey, it's just not going to happen. That's how optimistic people are when you see that VIX gauge down, in the low teens, and we haven't seen that since pre-COVID. I mean, we're right back as far as confidence goes and greed. I would say before we go to a commercial break, I would say this, in terms of what Warren Buffett says about this. He always says, be greedy when people are fearful, and fearful when people are greedy. And right now people are greedy. That doesn't mean I'm not participating. Of course I am, but I'm doing it cautiously with the rules that I would apply in any market.
Well, I have personal experience that's important. Early on, when I first started to invest, we were saying, you got to get silver. And so I went out, I put all my money into silver ETFs, right? I got my own account, silver ETFs, and I was gonna kill the market. I was just gonna sky high. Well, I'll shorten the story to say that I made not a penny and lost all of it, but I had a huge learning experience. And actually, Andy, it was shortly after that I met you, and we started a friendship. And thank God you coach me now, because I don't ever want to go through that again. But I don't want to dwell
Well,
just on the negative here. I really want people to understand that there's a huge upside, and this is an upside that I personally take advantage of because you taught me how. And I'd love for everybody to just stay through this commercial break, listen to the upside, listen to what Andy can tell you that will really help you, I guess, navigate the stock market. So, Andy, I'll let you talk when we get back.
fantastic.
Welcome back to Rich Dad Stockcast with Andy Tanner. And we made a promise. We were going to talk about the positives of the stock market and why now is a good time to get back in. But before we do that, let's make sure you hit subscribe, leave a comment, tell Andy how nice his shirt looks. Usually, Andy and I do this t-shirts and a baseball cap, but this time we're like, you know what?
This video stuff's killing me, man. I the podcast, I had my baseball out on backwards and my t-shirt just after getting out of the gym, just a mess. So we're trying to clean it up here and look presentable.
Right.
I don't know how we're doing,
if
but
you're
we're
only
trying.
You're a very handsome man. If you're only listening, Andy's actually got a collared shirt on, which I don't know that I've ever seen before. So
That's kind of
he's full game
stock
here.
traders.
Full game.
Stock traders we don't dress up much, but we'll do it for you, Greg. So
I
anyway,
imagine you're wearing like basketball shorts under there. But anyways,
there's a 50-50 chance.
So let me remind people that Andy Tanner is Rich Dad Wealth Expert. In fact, he contributed to the Wealth Expert newsletter last week, and you can still get what Andy contributed, and you can get it free. There's a link below. It should give you 2 weeks free to the Wealth Experts newsletter. If I was you, take the 2 weeks, quit if you want, don't quit, whatever, but just check it out, especially check out Andy's part because real value in that, and hopefully, Andy, you go into this, that one of the great things about getting in the stock market is you can make money up, down, sideways. And Andy briefly touched on that you can invest with insurance, which is a unique thing for a stock market. So Andy, you want to just take it off and list some of the reasons people should be in the stock market right now and some of the ways that they can feel really good about it.
Yeah, I'll tell you, when you have a discussion on real estate or stock, I think you should have a context that is similar. For example, if a person were to go to flip house, flip house, flip house, flip house, or you could buy another, buy another, buy another, buy another, one of them's after money and one of them's after assets. In other words, the house flipper's chasing cash, and they're going to flip, this house, this house, this house, and hopefully they get cash over time. But what we believe is in acquiring assets that produce cash. In other words, instead of buying a golden goose and hoping I can sell the golden goose for more money later, the reason we buy a golden goose is to get the eggs. That's what we really want. And rather than buying one golden goose and then selling it, another golden goose and then selling it, another golden goose and selling it, you buy more geese that create more eggs. And I think one of the reasons that people don't understand stocks is CNBC's fault, really, and Wall Street's fault is because they're all about the price. Money, 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 price, 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 price. I like to look at an asset, whether it's real estate or stocks or business, exactly the same. I picture it like a little jack in the box with a crank that does work. And then it earns money. It pops out money. Now, there's a price tag on that. But to me, that's the least important thing. So a person needs to make a decision, whether they want to or not. Are you going to be a consumer in this world? Or are you going to be a producer in this world? So I'll do it the way I taught my sons. I said, son, let's just pick a stock that's got some decent fundamentals. And he picked a stock called Foot Locker. I says, okay, let's see if we can make more money by producing shoes than by buying shoes as a young man, if that makes sense. So the reason the stock market is so important is people are allowed to participate in a global economy in a way they never could participate in as a sole proprietor. It's massive. Think of the trillions and trillions, tens of trillions in our gross domestic product, just in the United States. Well, I make more money by selling gasoline than I spend by buying gasoline because I own ExxonMobil. I make more money by selling AT&T services than by using AT&T services because I own AT&T and Apple and a slew of others where you want to put yourself in a position where you're producing. I'm a huge fan of dividends, and I'm a huge fan of option premium because it's cash flow. So I really don't care what the fear gauge says. I don't really care whether they are optimistic, because that little gauge we looked at is all about prices. It's whether they think the S&P is going up or whether the S&P is going down. Well, I don't really care about that stuff because I'm not interested in selling any of my stocks. If all my stocks go up, what am I going to sell them? No, I'm not going to sell my golden goose. No matter how much you offer me for the golden goose, I want the eggs. The only time I'll sell my golden goose is if it stops producing eggs. And as long as Apple's selling phones, and as long as Kraft Heinz sells ketchup and mac and cheese, I'm a producer, not a consumer. So it's pretty simple if you look at it that way on your own financial statement. Am I bringing in more money from being a producer of goods and services in this world? Am I an owner of companies? I don't even like saying I own stocks. I like saying I own companies, right? I mean, that'd be more accurate.
Can I interrupt you real fast here? Because this
Please.
is crazy important. I don't think, well, no one I've ever talked to has thought of the stock market as a place for passive income. So I want to make sure nobody overlooks what you're saying. What you're saying is monthly cash flow through stock investing. And you just said it really fast, but you have two different ways of doing that. And that's pretty huge. When we said there's going to be a benefit that we list why you should get in the stock market, I want to make sure everybody hears that. You can have passive income. And most people will talk about dividends. That's the only thing I've ever heard. But you have your options way of doing passive income where it's not just insurance. The options are also creating passive income. I just want to drive that into people's skull.
For sure. Yeah, I mean, Warren Buffett has a company called Geico Insurance, and that gives him massive advantages as an owner. He has something called float that he uses. We could talk about another day, but the reality is he sells more insurance contracts than he buys. And the same is true in my life. I want to sell very much more option premium than I buy. And so it's kind of rough right now in that where fear's low, there's not a lot of option premium, but there's still a market for it, and I still get it. It's not as good as when people are fearful, which is fine. But I'll tell you, I think people pass over the idea of dividends because they say, well, this company only pays a 1% dividend. Well, that's at today's price now. If you have a nice little dip in the market and you pick it up at a bargain, you have a better cost basis. And let's say I'm using that option premium to supplement, that reduces my cost basis. So the difference between, I don't want to dive into too much jargon here. If you want to know more, you can subscribe to a newsletter and, get into some of the more detailed education. But the reality is there's a difference between dividend yield and investor yield. Right now the dividend yield on Apple might be less than 1%, but if you bought Apple at $50, you got a nice fat dividend because your price is different than the price that they got. I'll touch on this as well. I think AI is a real game changer. There's good and bad to it, just like the internet opened up. There's so much fraud on the internet now, but we still use it because there's more good than bad. And when you saw AI, I'll give you some warnings about just hopping into AI because you brought it up. It reminds me of the tech bubble a little bit. Back in the 90s, going into the year 2000, the late 90s, people didn't brag about what they were doing. They bragged about what they thought they could do. They didn't brag about how much money they made. They bragged about how much money they've raised. And I swear, if I hear the term serial entrepreneur one more time, I'm going to slip my wrists. I'm so tired. So what they do is they tout how much money they've raised instead of what they've earned. They tout who they have on their team and what they did at another company instead of the one they're doing it right now. And they tend to go out and they tout what they think they're going to do rather than what they've already done. And what happens with that is it floods money, just like the tech bubble. It just floods it with money. And then what happens is the guys that everyone gets cleaned out, and you wind up with the FANG trade. You wind up with a Facebook and a Google and an Apple. You wind up with those that kind of the cream rises to the top. I think you're going to see the same thing. AI is going to be huge to help businesses because of the way I use it now, it's amazing in how much it helps us already in its infancy in our business. So yeah, it's going to be a big deal, and there's no question there's an AI component, and I think if a person understands fundamental analysis, which is my first pillar of investing, they're going to have a better chance at getting a really solid company that produces AI. If someone is frightened about their job being taken away, own an AI company. I mean, I'm telling you, I tell my sons, you should buy some AI companies and you should do your fundamental analysis, because the next billion-dollar company might be owned by two people, might be two guys in a garage, just like Wozniak and Jobs, that come up with some freaking amazing machine learning. It's the next billion-dollar company. So there is an element.
I don't want to like keep on the sidetrack with AI, but AI being brand new and these companies, like you said, two people in a garage. How can you do fundamental? Well, first, can you just real quickly explain fundamental analysis? But then how can you do that with such a new company that hasn't been around and have a track record?
It's
oh, wait,
tough.
I got one more comment if I can interrupt you. Since we're talking about the benefits of stock investing, one of the things I absolutely love is that once Andy taught me, I can go in any publicly traded company. I can look at all their financial documents. I can look at everything that's been submitted to the government. So I can look at it with confidence that it's true and they're not lying to get my stock vote or whatever. And I don't know a lot of other investments where you get such full transparency and disclosure.
Yeah.
So I wanted to bring up that benefit.
Yeah, there's certainly going to be the Enrons. They can lie about their fundamentals. And when we talk about fundamentals, what do I mean? Well, if you were to go to the doctor, they would do a checkup on you. And there's certain fundamental things that makes a body run well. I'd go in, my doctor say, Andy, your BMI is starting to creep up again. We got to get that thing down, right? Oh, your blood pressure's a little high. Oh, your pulse, hit your knee with the hammer. There's just stuff that lets the doctor know, look, I don't know the details, but fundamentally, the things that these vital signs that keep you alive, they're running well, right? Well, a business has those same types of vital signs, income, expenses, growth. You can get into fancy terms if you want to dive down, but when you say fundamental, analyze just means we're going to look at something. Fundamental means there's just certain things that should go well, like cash flow, right? And so it is hard to look at a guy like Wozniak and Jobs. On the other side of that, though, it's really easy to see a company like GM that Romney and Obama were debating in their presidential debate about whether they should go bankrupt or not because of that transparency. So you can kind of see those that are about to fall. But here's the thing: you don't need you don't need to have AI technology to benefit from AI. Look, here's what I know: people are going to want to have food, clothing, shelter, medicine, and energy. They want food, clothing, medicine, energy, stuff like that. So no matter what AI does, all AI will do is help us get that stuff better and faster, hopefully cheaper. And it's going to make companies that produce those other things a ton of money. So, if I wanted to participate in Bitcoin, one of the ways I could do it, buy some Apple stock, buy some AT&T stock, and buy some Coinbase stock. And two of those three. Because here's the thing: you can't trade your Bitcoin without buying one of my iPhones. You can't trade your Bitcoin without being on my AT&T network. And no matter what AI does, we'll let the cream rise to the top. You're still going to need food. So I have clothing companies that I own. I have, if you were to look at a really nice real estate portfolio and say, look at all these people spending money on rent, that's awesome, because you use debt to get there. Nothing wrong with that. But I can also say I have customers that buy phones. I have customers that buy clothes. I have customers that buy computers. I have customers that buy energy. I have customers because I'm participating in business. And one of the things that just makes me crazy is I'm a capitalist and I believe in inequality. And let me show you, like someone's going to take that snippet and say, look, Andy said this, then you get canceled. What I mean by that is the inequality means you got to give more than you take. In other words, what an entrepreneur does is they give you this phone that you could never build on your own, and they give it to you for $1,000, which you like, man, that's worth more than $1,000 to me. That's the only way people ever spend money, is they feel they're getting more value than they spend. And that is an amazing opportunity, because people say, well, it's not fair that Jeff Bezos has 12 swimming pools and I don't have one. Jeff Bezos will share his company with you, buy his stock. Steve Jobs would share his company. And if you do it early on, the prices are even lower. So the idea that someone would not want to participate in the trillions and trillions and trillions of dollars available in American business, be a capitalist and participate and own these businesses and receive cash flow all the time from the products and services that are offered and the good work that's being done. I don't like the word making money. I like the word earning money. And that's why we call it earnings season. We show how much we earned. There was work being done in a factory. There was work being done somewhere, and you can participate in that if you want to. The downside is when everyone fixates on price, because prices are going to go up and down all over the place, and they don't concentrate on the work being done, the value being produced, the earnings being made that are distributed in real estate or divided in stocks. It's semantics. It's the same thing.
Well, Andy, thank you. I'm gonna end
kind
it
of
on
a rant. Did I just do a rant? I think I did a rant right there.
But the
reason I ranted is I am sick and tired of people saying that, there's no opportunity. They will share the wealth. Now, they're not going to give it to you, but you can buy your share at a fair price. And people in our standard of living, you can allocate some money towards buying some assets, whether it be real estate, stock, business, I don't care. But a person should be a producer in this world as opposed to a consumer in this world. And that's, to me, what capitalism is. Get things cheaper, produce more, give more, take less, better battery life, better camera, better lens, better iPhone next time, less money. Prices go down, quality goes up. That's standard living goes up. That's capitalism, baby. I love it.
Yep, baby. Well, Andy, thank you. For everyone still listening, hit subscribe. Get the 2 weeks free newsletter, little gift here we got for you. And make sure you leave a comment. Especially like to hear what you thought about Andy's last rant there. It's pretty entertaining.
Andy's ranting. Oh
so,
no!
Yeah, we should do a show called Andy's Rant or a segment.
Oh geez, I don't know if I have that many.
We need to talk about your power of six in the next few shows. We really should hound on
very
that.
Powerful.
Yeah. All right, everybody. Thank you so much for watching, listening, just participating in general, and we'll see you next week.
Good to be back, Greg. Good to see you. We'll see you next time.
All right.
This podcast is a presentation of Rich Dad Media Network.